Good afternoon. This is the Eye of the Storm podcast with the Elliott Wave weekly update for the S&P 500 being recorded on Friday, November the 21st at 4:02 p.m. Pacific Standard Time. It was a very exceptional week. It truly was an exceptional week, complete with gigantic moves, very profitable, gigantic moves um, intraday, and massive movement in some of the Mag 7 stocks, particularly NVIDIA, which is the number one stock in the NASDAQ in terms of weighting. And just for example, after the earnings were reported on Wednesday, NVIDIA ran up to 196. And by today, it had dropped down and touched 173. And so that's 2 days. And basically, not even 48 hours. It is more like, we had 6 and 6, maybe 12, because we have trading, right? And then we have time where they're not trading. So, but actively, this market in NVIDIA really moved, and at the same time, moved the NASDAQ, moved the Dow, moved everything, all of the indexes. And they weren't the only ones. So let's be serious here. We saw the Dow drop and then rally. We saw the NASDAQ drop, and within huge ranges. So in other words, it's like being up 500, being down 500 or more, and then going down. I think what I'm trying to remember what it was this morning, but we can just take a look here, just in the SPX itself. The low was 65.21 or 22, and the high was 66.60. I mean, that's a pretty big range for the SPX. The Dow was a bigger range, maybe not percentage-wise, but a bigger, number-wise, and the NASDAQ had a huge range. So lots of opportunity, lots of things, but I want to tell you that it was not the easiest thing to trade because it depended on what your account size was, what a type of account you were trading. I work with a lot of people from prop firms that either have them and have both evaluations and performance accounts or money paying accounts. So in other words, it's like what they earn, they can get a percentage of. That blew this one out, and et cetera, and not intentionally by any means. It was the way that the market was trading, and the speed at which it went from one price to the next and back and to and forth. And I'm not talking about within 15 minutes or 10 minutes or 5 or 2. I'm talking about within a 1 minute bar. You would see 4, 5, 6, 7, 10, $12, then come back 4, 5, 6, 7, and go back up. And because the bids in the office were just coming in and flying. So what's the bottom line to all of this? Was that there was plenty of movement. And what was creating the movement was options trading. Options trading on every vehicle that we got. And today was an expiration. It was the monthly expiration, pretty much in every vehicle that we have that trades options. So a lot of activity, a lot of capital flowing all over the place and getting placed and being moved and being changed. And that gives you a lot. If you're focused on one index or another index or one product, it can be really crazy because you get this big group of buyers, you get the sellers, you get the buyers, you get the sellers. And when you're doing an index of stock, the equities, they're all kind of going into different directions because it was an expiration in all the stocks, in the ETFs, in the indexes, in the futures markets, in the precious metals, in the treasuries, etc. So with all that going on, you need to take a step back and just take a look at what really happened today. A lot of money changed hands. A lot of money got swirled around. That's great because having that happen keeps the opportunities alive, keeps the trading, keeps a lot of people in business. So it's like maybe it was a great day, maybe it wasn't such a great day, maybe you even blew an account out, but you have the ability to go start over and do another one. These things are important. These are your takeaways. So as far as trading, it kind of was an extraordinary week and on many different levels. on an Elliott Wave wise, um, everything kind of fits. Now, when you're stuck, not stuck, but when you're standing in these chaotic moments, it does feel more likely more than what it is, because it's moving fast, and it's just because of one particular thing, and that's the options trade. I know I keep going there, but this is what it is. So it's not a matter of being bullish or bearish. It's a matter of like, okay, there's that strike and there's the stock, and we're going to take the stock down. The stock's going to go up, and that's going to happen to this or that. And so you've got volatility. Then you've got all different outside factors. And then you have the dealers. Those are the people that are standing there, or the groups that are not standing, they're actually at a computer, making those markets and all of those options. And then they need to adjust. So getting the math down, getting the math correct, because that's what's triggering a lot of these moves. So my other point is, while we're sitting here, we're watching, and this is going, there are a lot of other factors, a lot of other numbers that can be added to our own equations about where do we sell, where do we buy, how often, what's it going to look like, what happens when we break this level and that level. That's where I'm kind of going to begin today, and that's where I'm going to kind of stay today. And what I'm doing is I'm combining gamma levels, call walls, put walls, hedge walls, volatility triggers, all the different things that are more options related, because it's those trades and the function of the trade, or the action of the trade, producing these levels, these gamma levels, these delta levels, etc. That when a stock moves, so does money in an account, and that you have this position on in these particular stocks, and it's going to move. And because they all funnel up into an index, a future on the index, but they funnel up to an index. And right now, the case is the SPX. Still, the SPX, and you'll hear me say it if you ever are in a trading room with me, that SPX is Big Daddy. It's granddaddy. It's big granddaddy, because it's been around. It's still massively funded. In other words, it's like it has a lot of the big institutions, when they're coming to trade, and they're putting on either a directional trade or a quarterly trade or just some type of hedge or something else. They're coming to the SPX because they can get it done, and they get it done in a click. So it's still Big Daddy. And that's the index that I'm looking at right now. And it's not been the easiest one, because there seems to have been a lot of fits and starts. But again, what that really is kind of winding down to is the importance of these gamma levels, of the option, the levels that are produced by option traders and dealers that are making those options, that are having to deal with the futures market, with the cash markets, with all the different things that are going to stock. Okay, now this week, because we had such large moves in the SPX, particularly yesterday. Yesterday was very, very big, and it really set a lot of people back. Now, what was going on in that thing? They were knocking it down. And the main thing to kind of keep in mind is that I spoke about it, others have spoken about it, others have printed it, that there was negative gamma, and a negative gamma atmosphere, it is, you got it, the hedge is sell, the adjust is sell. So that's what's associated with risk off trading is selling, risk on trading is buying. So the market's going to go up. It depends on what the action of the dealers. If the public or other trading firms, et cetera, are coming in because they're buying calls in Apple, they're buying calls in the Mag 7, they're buying calls in the Qs and the spiders. Well, the dealers are selling that, and they're turning around and having to buy that underlying. So the market tends to rise. Volatility tends to go in a particular direction, perform in a particular function, because it has a very large function in risk-on trading. And so, again, as these things ebb and flow, produces a lot of what we have in terms of waves. So again, this is where I'm going to bring in the Elliott Wave. So I know it's kind of a long about, but the changes I'm seeing in Elliott and how we count and what these different patterns are producing. I have a little bit better understanding why some of the newer stuff has come into place. It is not necessarily a brand new function. For case in point, there's a lot of things that are happening right now that people are saying, hey, use WXY and WXYXZ. And I'm like, well, to me, that's nothing more than just a double ABC or a triple ABC pattern in a correction. And it's like, yeah, but there are nuances to it that aren't necessarily nuances to that double ABC or that triple ABC. So again, when we're looking at something, I'm learning and I'm coming to the table saying, yes, I think looking at a WXYZ is beneficial and having an understanding of it is beneficial. So right now, I just want to go over the Elliott Wave count quickly. I'm not going to go start out on that monthly. I'm just going to keep it here on the daily. So what we're really counting is that final minor fifth wave. And when the minor fifth wave is finished, in turn, it's going to complete minor 5, intermediate 5, primary 5, and cycle 3. Those are my larger levels. So going up to a cycle 3. Other people are going to have different types, but what I'm finding is there's not so much difference in the number. So in other words, up at the top, many are finding this is a completion point of a third wave, whether it's cycle degree, whatever the degree is, that's where there might be a difference. And normally and kind of what I'm finding is those degrees. Mine is a cycle, but others are going above that. That's not as important as the action that comes next. So what we're talking about here is that we're going into a fourth wave correction. And the fact that I'm doing it on a cycle degree and others are even on a larger cycle degree, the key word is larger. So this was a fourth wave. This was a fourth wave. This was a minor fourth wave. This was a minuet fourth wave. This we're finishing is a minute fourth wave. So in size, there's this one, then this one, and then it goes up. This is minor, then it goes up to intermediate, and then it goes up to primary. And so we can go back out on the calendar, or not on the calendar, but on the chart, and look at this is a 3-year weekly. So this is again is the minor. We've been at this for a while. Let's go to the 5-year weekly. Now there's the intermediate. So right, we have the minute, there's the minor, there's the intermediate. That was the 2022 low. So after intermediate comes primary. Well, I got to go out to the maximum monthly for that. And here's the primary. That was 2009. That was the low, the primary for. So what am I talking about here? Well, I'm talking about a cycle fourth correction. That's up there. So we're into a cycle fourth, and it's going to consist of 3 waves, because that's Elliott. That's what Elliott teaches us, that the market moves in trend directionally in 5 waves, and it corrects in 3. Those are the big important steps, right? The 2 things we have. Right now, we're still in a bull phase. So our rallies are 5 waves up. Our corrections are ABC down, are 3 waves down. And you can find that pattern and just follow it all the way from the beginning. And we're still in progress. So what we're finishing now is this, and we're going to have a larger fourth wave. Now, I've gone over a million times of what Elliott left for us to tell us that that fourth wave will normally find its terminus, its endpoint, within the fourth wave of one lesser degree. Well, when we're down here in these little ones, yeah, it's very important, and they work, but they still work no matter how big you're getting. The guideline is the guideline. So once we have firm confirmation, which I believe we're going to get pretty quick, that cycle 3 is in and cycle 4 has begun, then ultimately over the next several years, I suspect that the market will decline. Then we'll have rallies. So it's going to reverse. So the impulse is going to be to the downside. The correction is going to be to the upside, but still 3 waves. So now we're going to change our focus. We're going to be doing 5 waves down on an impulse basis and 3 waves up on a corrective basis. So wave 1 will be down, right? Wave 2 will be up. Wave 3 will be down. Wave 4 will be up. Wave 5 will be down. And then that'll finish, say, the first wave of 1. And then we get a larger ABC up. So the same ladder, we're going to crawl up until we get back up or get down to the completion point for a cycle fourth wave. And that's the area that I'm looking at. But it's not going to be for a while. So the whole point of what I'm telling you here is that we're going to go into more of these negative gamma situations that produce heavy duty selling. I think because of the way the options trade, it's going to take a while for the whole mindset to change. It like we're correcting and we're not stopping for a while. We're correcting. We got to get through all this stuff because it's just everyone. Oh yeah, I'm not going to go into that side of it. Sorry, I didn't mean to go off track there. But it's going to take time, and so there'll be a lot of things. But get this. Because we're coming down in a primary 4, and cycle wave 4, which is going to be a primary ABC. And then inside a primary wave A, we're going to have another either 5 waves down to form primary wave A, so 5 waves down of intermediate degree, or we're going to get an intermediate ABC down to form primary wave A. So again, we got a whole bunch of stuff that we're going to be dealing with, but we're going to get even inside all of that, periods of rally, could be a week, could be a day, could be 2. So again, plenty of trading to be done, and there'll be plenty of options trading. And that's the other part of the good news that we're getting when we see how much is being done on an expiration, on a November expiration. So it makes me look forward to the December. There'll be plenty to do. There'll be plenty of money going around because they got to get it placed. They're making changes, doing everything for that December 31st close. Year is done, move to the new year. And a lot's going to move with us. So again, we should still have plenty to do. The market should still be well funded. And so again, that's all good news. Now, let's get down to what we're doing to get up to the top of this fourth wave. I'm going to bring it back down to that daily. So here we are in the last minor wave 5 of intermediate wave 5, of primary wave 5, of cycle wave 3. So we're kind of in that last 5. Excuse me. So what my point is here, what my point is here is that each time we're going down a degree. So we're minor 5, we're going down to the minute. There's got to be 5 waves of minute degree. And believe me, when this all shifts and we're going down, it's still going to be 5 waves of minute degree, but we're going in the other direction. So this is all to the upside. And our corrections are down, and they're ABCs. So we've got it to where minute wave 3, I moved it up. So this continues to be the count that I think is actually in play. I have the other, which we're running side by side, and it continues to be okay. But we're not at severe breakpoints where that really is going to kick in yet. And then we have things of what would happen today, right? In terms of we were down substantially right away in the morning. Then we rallied. And there was at one point that was up over 700. It was up over 760, I thought I saw. And the NASDAQ was, I believe, up over 400. So again, this is after being down heavy today. Those are our gifts, folks. If you're a day trader, these are our gifts. And again, trust me, there's a whole bunch of stuff that goes with the trading. There's a whole bunch of stuff with that mindset. There's a whole bunch of stuff that you got to pay attention to. And you cannot be, you have to be, you put your trader hat on and you got to trade. Enough said there. All right, so back to this. So that's the daily. There's 1, there's 2, there's 3, there's 4. 4 is not done yet, but we're close. In my view, we are close. So now I want to start adding the fibs for this fourth wave. The most important one is going to be running it for minute wave 4. And that is going to be just straight fibs, retracements. And it's also on the minutes, which is going to be this color. Now, I'm just going to go and set this up because you see we got down to very close to the 236, which is actually there. And we're finding that there's a lot in this whole rally process that we've been going through, that 0.236 is kind of coming in as the, I want to say preferred, but kind of the preferred level. And that's shallow for me, because what truly the most common is 0.382. So I'm going to take that down. I'm going to put 382 because we've almost reached there. And I think we still have more downside. And then I'm going to leave 50 as well. Those are the two most common. So what we have, 62, 26, 27, and 60, 10. Now, think about what we talk about. If you're a member and you're there on a subscription basis on YouTube, you get these numbers every morning. I have been for the longest time talking about that there's a large gamma position sitting, grows, gets less, gets more, at 6,000 SPX. Well, right now, currently, that would be about 6019 in the ES. Look where the support is, the 50% support. It's at 6,000. It's not the most common. The most common is 382 at 6227. And I'm like, wow, okay, maybe that's not even going to be, because we have now, I'm going to add this to this, that, well, here we have it, the 0.236, which is 6494. 6,500 is a very important support level in the SPX right now. And that is option wise. So to break through 6,500 would truly shift risk off into a little bit higher gear and probably send us towards 6350. That would be our next level, which actually right now more or less coincides with the daily 200 period moving average. So again, remember, we're going to got to try to keep doing the math. So what am I doing? I'm combining Elliott, the wave, the characteristics of the wave, and how they fall in with Fibonacci, which is a number sequence. And these support and resistance levels are number sequences to get them. So again, all of it is number based. And gamma levels are numbers. Delta is numbers. And volatility is a number. And there's certain things that you understand and you can do when that rises, when it drops, when it goes through it. For example, a volatility trigger, what happens? What happens to the market you're trading? And trust me, volatility triggers exist in all the equities. Volatility triggers exist in gold, silver, all of them. We're just dealing with the SPX, the ES, and the NQ, and the NDX. But they're found everywhere. So volatility triggers in the individual things. It is, for all intents and purposes, that's where risk on triggers on or risk off triggers. And that's the volatility trigger that depends on, is it breaking to the upside or is it breaking to the downside? So recently, we have seen early where it's broken to the downside and then continued breaking through additional gamma levels on the way down. That brings about a situation where not the cover necessarily, but the adjusting or the trade is going to require selling. You're going to have to sell to get yourself to another option term, like a delta neutral type of position, to where things are evened out. So you're hedging a little bit, you're trading. But in terms of being a trader in the index, you're going to see that it flips to selling. Break the volatility trigger, it flips to selling. And as you're coming down, if you're starting to break other important strikes that having larger gamma levels at it, well, you're likely going to produce more selling or adjusting, which could be selling. Again, action to the number, action to the math. And we saw a lot of that yesterday, a lot. It was like 2 straight hours. Let me just kind of bring this down and show you. This was yesterday. And it began selling. This is going to be Pacific, so I'll convert it. 10 a.m. Eastern. And the first round of it basically finished at 10, no, yeah, at 2 p.m. or 1 p.m. Eastern. So really in what, 3 hours, 2 hours? Nope, more. 1, 2, 3, 4, 4 hours. The market dropped substantially and it just fell through volatility triggers, through gamma twos, gamma three, large gamma one's way down there, but large gamma positions. A lot of things happened that just kind of aggravated it, kept going. There's a lot of adjusting. Okay, given all that, these are opportunities. Now, they become more difficult to trade because it's moving so fast. And so and I'm telling you this because, again, a lot of people that I work with and that are coming and we're trading together are doing prop firms. So they're either doing the evaluation to get the prop, to get the account, or they already have the account and now they're just working to earn money for themselves. The performance account. They're very popular. And sometimes it's like, wow, this is great. When we get directional moves like this and you're sitting on the right side, it's like, it is gold. You make it very quickly, large amount of money. You can make your daily goal real quick. So whole nother mindset. Again, different conversation. In the analysis, I've been working to get to this fourth wave. Now I want to add one more. There's the minute degree fourth wave, 64.94, basically because I'm saying, that's 236 and actually 6,500 SPX is right there. So, and that's kind of an important level right now, particularly going into next week. If it's broken, I believe our next stop will be 63.50, which is another important gamma level in the SPX. So we can map it out. Fib-wise, the most common for this C wave and for the fourth wave is down here 0.382, and that's at 62.27. Now, we're inside this thing. If this truly, I'm going to bring this down to the 15 minutes because we're going to take a look inside. There's the B wave. Here's wave one. That's the best I can do right there, coming in right there. And we should be able to get an ABC up. But if I look at this now, I got to take that off. Why? Because I have 1, 2, 3, 4, 5. See it again? 1, 2, 3, 4. Or you can put the 3 in ABC, 4, 5. Now, one other thing possible, it could be A, ABC, B, C, wave 2. I actually didn't put it back. I know there was a reason why I left it there. So it's either or. So here's how I'm going to leave this situation. Because if it's counting it as 1 and it's a 2, then there's a possibility that we're going to go hit again in a 3 and a 4 and a 5 and have a fair chance of getting below this level and down closer to 63.50, which is our next important level. Because we would need a 1, a 2, a 3, a 4, and a 5 to put in the C wave and then start this motion. Now, let's take one step back and take a look. 1, 2, 3, 4, 5. If it's that, let me just move this away for a moment. And now we're subdividing, right? So it's 1. This knot is going to be counting that way. We're going to put this 1 up here. Because what we're going to do, this has to be counted. If I'm counting this as wave 1, there's 5 waves inside of it. And this part, I got to say is 1, 2, and 3. And then a 4, and then we're coming down into a 5 down into there. And it's a strange little, pattern. But that would be a wave 1. And then this is what we're looking at. So we'll go 2 ways. 1, 2, 3, 4, 5, ABC, and then we go up and we go beyond it, and we can do another 5. And that's 1, 2, and then we're in the third, and we're going to the upside. And this gets marked as wave C and minute wave 4. Now, that's possible, but we need a little bit of proof. We need some action from the market. What is the market going to do? Because it's not me. I don't suddenly, crystal ball. It's like, okay, hit the screen, and it's going to be like, well, so be it. It's done. These are our choices, I believe. If we're going to go up, I believe we will go. We may go finish this off a little bit. All right. So it might come down a little bit more to put in a wave 2, and you can, put in a wave 2 if we're going to go back up. And you can do those same, we can do those same fibs. I'm going to do it this way. You just go for retracements. So coming down in the second wave, we've already surpassed 382. We're coming up about 50%. Most popular, 62, next most popular. So we have 65.80, 65.90 down to 65.75. And that could be a wave 2. And then we come back up. Now, if we're going to start to break down, because what we have is the ABC up, well, then what are we looking for? Well, first of all, it should break 618. But we're definitely going to be looking for it to break 65.20. Now, here's something else. We're trading at 66.02. 6,700 to the upside, right here, starts to really bring back stronger. I want to say it's not necessarily going to be the volatility trigger. I think that might come in higher. But 6,700 is a point in the index right now. It represents a large gamma position. So if it's taken out, it's going to shift. Earlier, it's going to shift. So 6,700, and then right now where the volatility trigger is sitting in the SPX is 67.10. So between 67 and 67.10, the narrative begins to shift from negative back to positive. The risk off trade is done and the risk on trade resumes. And that's kind of the point where that could start to happen. And if it does, it shifts the narrative. And that narrative is to buy. That narrative is that this thing keeps going. That narrative would then suggest that this is not a 1, that this is the C, and this is 1, and we have a 2, and we're going to go up. That's my other point. So those are the two scenarios that I believe, as I gave you, an alternate and a preferred using the same count. So using this, it's like, yes, we still may have some downside to do, and that would suggest these levels. Now, market did some good things today. Market broke and market went up, and it went up sizably. A lot of money got pushed out into these higher levels. So we'll see. And they're going to credit a lot of that to one of the Fed governors who was out speaking today. They're interpreting everything he said as positive in terms of more dovish. That, oh yeah, we're going to get that rate cut in December. Not necessarily. What the man said was that, easing may be a little bit more palatable coming up. Didn't say December. In the future. I think was the word he used. Market wants to say December. Gotcha. But in any case, that's what kind of can drive this. And to finish the whole thing all the way up to that cycle 3, I really just need that move above 7,000. Now, yes, I've taken it all down. I'll reconstruct it. Pretty sure I took it all down. No, I didn't. The minor in the SPX is still sitting here. This one is actually not any good, I don't think. Let me take it off, see what goes. Yeah, it did. Sorry. No, but that's over here. Oh, 1, 2, 4. It's the wrong 4. Okay. So let's take this one off. Right, because I don't have those yet, because I don't have 5, but I do have minor. All right, so we have the ability to see above 7,000. And then we have 4.236 in the minor. And that's the final, the minor fifth, kind of come in as high as 70, 7,500, 74, 75, right in there. And I'll have additional, once we get the fourth wave in, then I can do wave 1 to 4. And I think that'll come in somewhere around 71, 7,200, up in there. And then we'll start building up in there. But it's 7,000 and above. And now the clock is kind of ticking even faster because the algorithms have kind of stuck to this December 10th through the 15th, it's jumped to the 12th. We have cycles that kind of come in. We have all kinds of things that kind of come in. We have year end. So I'm thinking maybe you reach that high, we start to decline, then do one last pop. That last week is all the last minute stuff is taking place. And we go from there. But also December the 10th is the next FOMC. So that kind of would fit. And for reaching a top then would kind of fit if we don't get a rate cut. So in any case, things to kind of put in there. Sticking to the numbers, they all still fit. Now, doing the math, that's how I'm coming up with the 2 suggestions that I am and what we might be seeing in starting Sunday and coming back in on Monday into next week. All right, let's go over and just take a look at the ES. I'm basically just adjusting the numbers. So here, that break is 67.29 and 67.19 and 67.29 here in the ES. They may change. That's like today, and it could change come Monday morning. So, but right now, 67.29, 67.19. So this is that area. So if we come up in this, let me take it down to 15, right? We have a 1. And then we kind of, here it's a little bit different because it is an A, B. How did I do this? ABC A, ABC B, and then a C wave. So it's an A, B, C, putting a wave 2. Before I was counting at 1, 2, 1, 2, 3, 4, 5, a 3, and this would be a 4. As long as it doesn't overlap that, it'll live. And then go up, put a 5 in, and finish this 3. And 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. It should actually be if we stay inside of here. 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. For this 3, and then a 4 and a 5. And I think I'd have to count this as at least a sub minuet, if not the minuet wave 1, 2. And this is sub minuet 1, 2, 3, 4, 5 for 3, a 4, and a 5. And then eventually, because we're looking for that minute fifth wave to complete. So we have minute wave 4 done, and now we're going to be doing minuet waves all the way up to finish minute wave 5. So 5 waves of minuet degree. So we're breaking it down cleanly. So it does kind of point in either direction. I can count it as an ABC up and put a wave 2, and then we drop. Or I could put that C wave down here, and we have 1, 2, 1, 2, 3, 4, 5, 3. Put in a 4. Don't know if it's done. We'll find out. This 4 cannot overlap this 1. So this one's fine now. This is a complete move. Here to here is complete. Now we're doing the 4th wave of this. And it can't overlap wave 1. And that's all the way down here. So it's pretty low. So, well, I should say that. We've seen these moves. So if it goes 65, if it goes drops below 65.73, it's a 2. And then we're coming down on a 3. If we kind of halt and go here, do a nice ABC down, go back up in 5, get above 66.90. We're likely heading towards 67.19 and then 67.29. Now, again, 1, 2, 3, 4, 5 of 1. So sub-minuet, 5 up to put in minuet, wave 1 of minute wave 5. And that's it. I really do want to leave it there. Basically, because I've given you both sides. I feel that a lot of stuff I talked about. The importance of the gamma, and that's really my focus is going to go over towards there. We can break it down. We get these levels all the way. We get the levels in stock. We get the levels in other instruments. So trading opportunities are open across the board. Across the board. And so I think depending on how you trade or what you trade, maybe your game is not to trade the future, but maybe you like trading the spiders or you like trading the Qs because you're trading options as well. It's all connected. So I'm looking to broaden my own base in terms of offering out different things for different styles of trading. And so I do have some changes coming as well. But let me get through the month of December. Anyway, I am going to finish this up right now. Next week, let's see quickly what we have, if anything, next week is Thanksgiving week. So it's always strange. And next Friday is Black Friday at all the stores. So we have a lot of stuff. Monday, we have nothing. Tuesday, we have U.S. retail sales, the delayed report from September. So we have that. We have the producer price index, which was delayed for September. So we have all that. We have Case-Shiller home price index for September. Business inventories, delayed report that was due August. Consumer confidence for November. And pending home sales for October. Okay, that's all on Tuesday, November the 25th. 26th, we're back to getting initial jobless claims and durable goods, a delayed report. And Thursday is Thanksgiving. And Friday, half day. And I believe, used to be, I think it still is. But all we have is the Chicago Business Barometer, PMI. So that's it, folks. Next week is a holiday shortened week, and it's a big family holiday. So things can kind of grind to a slow, giving us the opportunity to breathe, to enjoy family, to relax, and get mentally prepared for what's coming. All right, that's it. Next update will be on Monday morning.